Congratulations if you're thinking about buying an investment property. Now, one of the things that I struggled with most when I was personally just getting started was actually calculating the numbers on an investment property so that I can understand my cash flow on a week-to-week basis. So in today's video, I'm going to talk about four main things. I'm going to talk about the income that comes in from your investment property, as well as your expenses. I'm also going to talk about the entry costs and the exit costs, which is when you buy and when you sell a property as well. So I think these are the major numbers associated with buying a property. In today's video, we're going to talk about an example, which is buying a $400,000 property. And we're going to talk about buying that in Queensland. Now, I realize that you might be looking at spending more money on a property. I also realize that you might be looking to buy in another state, but we had to just reduce it down to a figure that made sense for you so that the numbers were accurate. So let's talk a little bit first about the income side of things. So obviously the income we're referring to here is really two things. Now, the first thing is the rent associated with the property that you buy. And the second one is sometimes if you have a water compliant home in Australia, you can actually charge the tenant the rent for the property. Sorry, not the rent for the property, the water usage for the property as well. So the second income you might receive from the property is water. Now, when we're talking about rent in this particular example, we're talking about a property worth $400,000 that rents for $400 a week. So a nice basic 5% rental return. So if we say $400 a week times 50 weeks of the year, we're now talking about $20,000 worth of income per annum from the rent. Now, from a water perspective, unfortunately, we don't get much. Most of the water that we pay is administration these days as opposed on the physical cost of water. But let's say that we get $400 a year in water from the tenant. So if we add this together, very simply put, we've got a property that's now giving us $20,400 worth of rent per year. So that is your basic income numbers. Now, let's slide over to the second column, which are the expenses. Now, your expenses, now there's 6 major expenses when we're talking about an investment property. So 1, 2, 3, 4, 5, and lucky last, number 6. Now these include interest, which is the most expensive cost associated with your property. Then we've got property management, PM, property management. We've got water, we've got rates, we've got insurance, and then we've got maintenance as well, which is that last little one that unfortunately is a necessary evil if you've bought a property, as everybody knows. So let's look at this from an interest perspective. Now we're working at an interest rate of a 5% interest rate. Now I know some people can get much better rates right now below 4%. Some people might be paying above 5%, but let's just work it out on a 5% rate, which means that the market interest in the market at the moment could increase by 1%, and this scenario covers it. So what I've gone and done is I've said it's a $400,000 property and you've just put down a 10% deposit. So you've put down $40,000 cash. Now that means that we're paying interest therefore on $360,000, which is the total cost of buying minus your total deposit. So based on calculating a 5% interest rate over 12 months on $360,000 worth of debt, we're paying $18,000 per year in interest. Now, you might have a much bigger deposit for that. You might have a smaller deposit for that. You know, regardless of where you are, this is the example that we're talking about here. Obviously, the larger the deposit you put down, the less interest you pay. Now, property management, we're talking about an 8% fee. Now, when I'm working at the 8% fee, what I'm doing is looking at the $20,000 per year of rent we receive times by the 8%, which gives us a fee of about $1,600 per year in property management. You know, and then you might also have to pay on top of that 1 week's rent each time you find a new tenant. Now, from a water perspective, the administration charge is generally about $250 a quarter, so $1,000 per year. From a rates perspective, I'm also saying $1,000 per year, which is, you know, some council areas might charge you $800 a year on a $400,000 property. Other areas, they may charge you, you know, $2,000. It really ebbs and flows based on local council area in Australia. Then we've got the insurance, which should always be building and contents insurance, as well as landlord's insurance. Now, as someone who's had one of my properties burnt down, unfortunately, by one of my owners, one of my tenants, sorry, it was really important that I had that landlord insurance, which covered the loss of rent for the period of time that I needed to get stuff sorted out. So, you know, for a couple of $100 a year, it can be a really smart thing that not all investors do. And then from a maintenance perspective, let's say that your property, is, you know, somewhere between 5 and 50 years of age. You might be looking at $1,000 per year, and some years you won't have to pay that. Other years you'll have to pay more. You know, your hot water system might go one year. The next year there just might be an issue with a drawer opening in a kitchen. It, again, ebbs and flows based on the market. So if we add all of that together now, what we're really looking at is a total cost of holding the property of $23,800 in a year. Now, it's pretty simple then to work out what your income versus expenses look like. We simply, excuse me, I'm just going to grab a different color pen. We simply go over here and we minus $23,800 from $20,400, which gives us a fee of minus $3,400 in a year. So if we work that out to a weekly basis, you're looking at this property worth $400,000 costing you $65 a week to own. Now, the thing about this $65 per week is it's before tax. Obviously in Australia at the moment, we also get a tax benefit from owning a property. If you're paying 30 cents in the dollar, then you can times that amount by 30 cents and you might get an extra, you know, $1,100 back in your tax return, which reduces your weekly cost to about $40 to hold the property per week. There's also some advantages of buying property in terms of depreciation, which could also be included in that. But talk to your financial advisor or your tax accountant about that and they can really help you work that out. So, you know, at the end of the day, this is why people buy property. And what I want to talk about here is, let's say that you were to buy a $400,000 property. You use $40,000 of your own money for the deposit, plus some other costs associated with the deposit, which I'll talk about in a moment in the entry costs. You know, you're effectively looking at a property to own a $400,000 asset, it costing you about $65 per week or $3,400 a year. But if that $400,000 property went up literally just by 5% in 1 year, we can times that by 5%, which means the property is now worth $420,000, and we can take away that capital gain, so the $20,000 from the $3,400 that it's cost us to hold the property before tax in that year, and you're still up over $16,000 positive from an overall perspective. So one of the reasons why I invest in property is because it makes me money when I sleep in terms of capital growth. And if you can work away at reducing the debt, you know, as you can see, your interest is $18,000 out of $23,000 per year on that property. If you can work away the interest to the point where you're not paying any, you would be plus $18,000 per year of passive cash flow on this property, plus you're getting long-term capital growth, which obviously ebbs and flows year to year, but over the long-term trend in Australia for the last 200 years, it's gone up in a pretty positive way. So that's your income, that's your expenses. You know, there's 2 sources of income, 6 lots of expenses there. Now, let's talk about the entry costs associated with buying a property. Now, there's 7 entry costs, which I'm going to talk about in a moment, but the first one and the largest one is your deposit. Now, as I said, this could be 10%, 15%, 20%, 50%, whatever you want to do, you do. But in this example, I've talked about the $400,000 property with a 10% deposit. So we're realistically looking here, sorry about the small writing guys, at $40,000. Now, it's not a huge amount of money. Maybe you've got some equity in a property that you already own, like your own home, that you could use to access that 40K, or maybe you've got $40,000 of saving, but that's what we're looking for the deposit. Now, the second thing is lender's mortgage insurance. Now, lender's mortgage insurance, when you're only putting down a 10% deposit, is a necessary evil. I just jumped on Google and typed in lender's mortgage insurance calculator, and I worked out, based on a 400K property with a 40,000 deposit, 10% deposit, you're basically looking at $7,000 of lender's mortgage insurance. Now, if you were to put down a bigger deposit, the lender's mortgage insurance gradually declines, and if you put down a 20% deposit, you don't pay it at all. The lower the deposit you put in, basically the higher the lender's mortgage insurance is. So we're looking at about $7,000 from that perspective. Now, the third cost is a solicitor. You know, roughly when you look at the cost of the solicitor or the conveyancer plus their searches, I've worked it out to be about $1,400. I only personally ever use solicitors because if you get into any trouble, they're much better placed to help you get out of it, which is why that costs a little bit higher. I also do thorough searches to make sure I'm making the most of the, I'm not missing anything, with the property that I'm buying. Then you've got bank fees, which again, I've kind of said can be between $200 and $500. You know, the banks love to get their little cut, even though they're going to get the value of the property over the next 25 years in interest. They still want to take a little bit of blood from it as well. Can't wait for the Uber of banks to come in and completely reshape that industry, because it's time, let me tell you. The fifth thing is your property management cost. So your property management fee is realistically, just in terms of the upfront entry costs, about $400, because that's your 1 week's rent that you pay them up front, as well as an advertising fee, which can sometimes be a couple of $100. So we're only talking $600 there, which is pretty good value considering the amount of work they have to do to get you and get the right tenant into the property. And then there's always, the sixth thing is there's always some maintenance associated with any secondhand property you buy. Now, you know, whether we want to acknowledge that or not, I tell my clients when I'm buying for them to keep $5,000 up your sleeve in the first 12 months to cover all the compliance, cleaning and maintenance stuff that the tenant's going to pick up in the first 12 months and the property manager. But the reality is $2,000 would do it for most properties, you know, unless there's some serious issues that you've identified in the building and pest, or your property manager's picked up some stuff. But just because those things are picked it up doesn't always mean you have to do it straight away. Now, the seventh and last expense is your buyer's agency fee, which in Australia, you know, a good buyer's agent will charge somewhere between $8,000 and up. So if we look at the total cost of all of these things together, now a buyer's agent can really help you navigate your way through the property marketplace. A lot of people want to do this on their own or assume that they can do it on their own, which is completely fine, but buyer's agents can add a lot of value and save that fee 10 times over sometimes in the first 12 months or the first 5 years, because they've helped you buy a better quality property that's more in line with your goals in the right market, suburb at the right time. So regardless of where you sit there, I've added that fee in. So we're looking at $40,000 deposit. For all of the closing costs that don't include the buyer's agency fee, you're looking at $24,000. If you add the buyer's agency fee on top of that, that's the extra $8,000 I was talking about, which takes the total entry costs into a $400,000 property to $72,000. Now, $72,000 of your cash down to get into an asset worth $400,000, increasing by 5% per year, from my perspective is a pretty good return on investment, because based on that original cash, in just 4 years, you know, you've got that money back, which is pretty hard to beat in most other asset classes out there, as long as the market's increasing in value. So they're your entry costs. You've got your deposit, your lender's mortgage insurance if you don't want to pay 20%, your solicitor, your bank fees, your property manager, you've got your maintenance and your buyer's agency fees. So they're the 7 costs, $72,000 to get into a $400,000 property. Now, you could use cash to do that. you could use equity to do that from your own home or another investment property. It's completely your call. Now, some people sell properties. I've sold 7 of them myself, properties that I've owned either as my own home or as an investment in the last 8 years. So I have good experience with selling or exiting the marketplace as well as buying it. There's really just 3 costs associated with selling. It's pretty straightforward. Actually, let's call it 4 costs. So you've got your agent fee, you've got your legal fees or your solicitor, and you've got your bank fees as well. Those guys, even though you've paid them all of that interest, are still going to want something on the way out. Maybe a little bit of your blood as well, I don't know. Now, the fourth cost, and arguably the most expensive, depending on which way you do it, is tax. It's always really fun to pay as well. You paid it on the way in, you paid it on every dollar that you've earned from holding the property, and then you've also paid it on the way out. So, you know, good to see government's got their hand in the pocket too. But all jokes aside, that's the cost of doing this business. Every dollar that I earn when I'm buying property, and whether it's if I own a property outright, I just know that I'm going to lose 30 cents in the buck. When I sell it, I just expect to lose 30 cents in the dollar too. Now, that might be hard to take, and that's why a lot of people don't sell property, but the reality is selling property at the right time can be an amazing way to reinvest that into something else or to pay off a property faster. You know, the government does amazing things for us in Australia with healthcare, with education, with roads, transport. You know, I appreciate that my 30% is getting reinvested back into the marketplace to help make Australian property better long-term prospects. So your agent fees, depending on how good a negotiator you are going to be somewhere between 1.5 and 3.5%. I like to pay for the right agent. It's not always about the cheapest agent. You know, it's pretty easy to find a good agent by jumping on OpenAgent or ratemyagent.com. So let's say, you know, 2% on a $400,000 sale is going to be about an $8,000 cost there. You know, which isn't too bad considering you haven't had to do any of the legwork. Your legal fees are around about $1,000 on the way out because there's less searches associated with exiting the property. Your bank might try and take $500 off you, maybe a little bit more depending on, you know, your circumstances. And then tax is just 30% generally on the gain, but if you've got a good accountant, then you can work something out there. Sometimes, if you've held the property for longer than a year, sometimes there's an opportunity there. If you've bought it as your principal place of residence and it qualifies under that scheme, then you don't actually pay tax on the sale of the property at all. So there's plenty of different options for you there to consider with your accountant or financial advisor about the future. So that's my wrap up. We've talked about a $400,000 example in Queensland. We've talked about the income, which is your rent and your water. We've talked about the expenses, which is your interest, property manager, water, rates, insurance, and maintenance costs. We've talked about the entry costs, which are your deposit, your lender's mortgage insurance, your solicitor, bank fees, property management fees, maintenance fees, as well as your buyer's agency fee. And then we've talked about the exit costs there as well. So I hope this video has given you some perspective around how you can work this stuff out yourself. There's plenty of really cool tools online to work out your agent's fees, your legal fees, to work out your lender's mortgage insurance, to work out your deposit, to work out your stamp duty costs associated with the property as well. So all of this stuff's readily available, and if you found this video, I'm sure you can figure it out in Google as well to find that other stuff. I wish you all the best with your journey. If you would like a hand building a bit of a strategy and talking about your next investment property, please jump over to www.pumpedonproperty.com where you can book a free strategy session in with myself or my brother Simon, and we can talk about your plans for the future in more detail. And if you haven't already done so, please subscribe to our YouTube channel, or feel free to duck over to our podcast, The Pumped on Property Show, where we do some different stuff that isn't in video format each week. So thanks so much. I hope this has made a bit of sense. I know it might be a little bit hard to see there, but good luck with your investment and good luck with your journey. So thank you so much.